So guys, welcome to my YouTube channel. So I want to just give some summary about what is Forex, because on the internet I just found out a lot of you think that Forex is a scam. That's your opinion, and I don't want to chase anything. I don't want to be excited that okay, it's a legit, how can you prove? So let me give you something. Let me give you this description before we go to the computer, because okay, so Forex, what is Forex? So Forex, it's like a foreign exchange, the short form of foreign exchange. So it's where it's like, let's say we take a commodity. Let's say we take a commodity. Most people, like, let's say a tomato, right? You take it from somewhere where it's cheaper, then sell it where it's expensive. Like here, I'm in Diani, so normally we take things from Kongoya, right? We take some vegetables and tomatoes, so from King Kongoya. So we take them mainly, like maybe there they say maybe one tomato is 5 bob. Then come here, we sell it maybe one tomato at 10 bob, right? So we make a profit of 5 bob, right? So what happens with Forex is that, let's say it's between currencies, because as you can see, Kenyan currency and the Tanzanian currency, it has value in Kenya, because one Kenyan shillings in Tanzania is 20 bob, right? And basically, let's use the example of dollar. So the dollar currency normally in Kenya it's 129 right now. Sometimes it goes higher, sometimes lower. So normally there's also a currency you can trade, dollar versus Kenyan shillings, but it doesn't have a high volatility. So we normally choose the base currencies, the high volatility currency. So as you can name, pound dollar. So pound, British pound. So that's the greatest currency. Also euro, that is for European currency, and GPY. So the GPY is for the Japanese yen. And also we can trade normally Canadian dollar. You can trade Canadian dollar, and also there's gold. So gold is not a currency, but you can trade. It's a commodity, but you can trade with the Forex. What do you say? It's like the Forex brokers. So normally a broker is something that, okay, the currencies, this is like a trade, like the trade you do in the market trade. So the market is like where people see clothes, tomatoes. Let's say it's a tomato. Let's use the same example as the tomato. So you're going to sell a tomato. You can't just go in the bank to sell tomato. Yeah, there's a specific place where you sell those goods. So that place, it's called a market, right? So that's the reason. Like if it's a Forex, it's a market. So the market is where you sell and buy. So if let's say you want to buy maybe tomato, you bought at maybe 7 shillings, then you sell it somewhere where it's let's say it's 5 shillings, right? That's a loss, 2 shillings loss. Then if you sell it somewhere where it's 10 shillings, that is a profit of 3 shillings. So that's the thing about Forex, because the more capital you have, the more profit you get. Because as you can see, let's say in the market industry, let's say you have a small kiosk, it means you're earning some little money. But if you have a wholesale, that means the capital is the difference there. So let's say the currencies, let's say if you buy a commodities, maybe I see in Forex, it depends on your capital. So the things called lot size. So the lot size determine your profit, because let's say you have a lot size of 0.01. I won't talk about the lot size calculation because it's another thing. It's just introduction to Forex, everything. This is just for the beginner. For the lot size, I'll talk about it later. So let me tell you, let's say it's a USD, that's my favorite currency. So it's Euro versus USD, so they're competing. So if it's Euro USD, that means if the Euro currency goes up, the dollar must go down. That symbolizes an uptrend. So there you can buy. If the Euro drops, the dollar my issue should rise, like it goes opposite. And if it doesn't, maybe it can consolidate. So that's where you consolidate. You want to buy, but it's still consolidating. So let me give you basics. So on the USD, so euro is always influenced by supply and demand. So the supply and demand, how can you say the supply and demand affect the market? It's like, let's use the tomato thing. So it's like if you go somewhere where tomatoes are many, that means the price will lower, because if you're selling your tomatoes at 15 bob, then someone comes with many people to sell the tomatoes at maybe 7 bob or 10 bob, you must reduce your price because you get a loss, or maybe you don't get any customers, right? So if the sellers are many than the buyers, that means the commodities, the tomatoes or nini will strike because the sellers will increase. So in Forex, the buyers and sellers must align. Buyers are not supposed to be like more than the sellers. It will affect, because if maybe let's say it's a tomato, right? The buyers are more than the sellers, right? That means the price will go up, right? Because if I'm the only person selling tomato, I have the right to choose. Maybe I'd sell it at 10 bob or 15 bob. But if there are many sellers, then maybe a customer comes and there are 3 sellers. One sells at 7 shillings, the other 10 shillings, the other 15 shillings. So the customer normally will buy for the cheaper one, right? So if you buy the cheaper one, I don't have the right to increase I can't increase to 20 because I'll lose more customers. So I have to reduce. So that's where the market ends. So let's say if the buyers are many, let's say they buy a commodity. So normally it's about us and the banks, because normally the banks don't want to tell you this, but the banks also they trade, because they only trade for the card, because maybe let's say the profit gains maybe for selling these currencies and these currencies, they're normally controlled by the central bank, right? So the central bank of Euro, the ones controlling Euro and the one controlling dollar, so they always protect their currencies, because like now, let's say the Tanzania, they control the currency, then it spikes. Let's say 1 Tanzania shillings to be 1 Kenya shillings. That means that the economy is good than ours. So normally the central bank, they control the commodities, the currencies. The currencies. So for them, the currencies. Let's say I just want to tackle. I don't give many points because there's another video create for that. So they normally are affected by the news, because if you say this economic news, like let's say in a country, that means the producers and consumers, they also affect the market, because let's say in the market the producers are many, that means the commodities will be, let's say the producers are many and the buyers are small, that means it will it will cause an inflation, right? Because maybe the prices will go down. The prices will go down, especially because there are many sellers than buyers. So you have the buyers have the right to choose the cheaper ones to buy, and if the buyers are greater than the sellers, that means the sellers are in control, because they can choose the price they want to sell to. So normally that is how the Forex works. So it's affected by news events, by these things like crude oil. Normally crude oil affects, because oil affects the transport. If you're in business, that is important. So the transport, maybe for the tomato from here to the market, it needs let's say it needs petroleum. Like petroleum, it's controlled. It's a byproduct of crude oil. So when the crude oil maybe increases its value, that means the value of the product also increases, and the value of the currency, the currency of that certain country that produces more oil will increase also. So thank you for your time, and in the next videos I will tackle about many issues concerning Forex deep down. So for now it was just introduction, and thank you guys, you're welcome. So stay tuned, as the next video will tackle about my account.